Good morning. It is quarter after 7 UTC on Tuesday, the 24th of September. Going through Bitcoin just because, yeah, we're basically running flat since yesterday. A little bit of downside crabbiness, nothing really too attractive, but there are some conditions for a potential short, as there are, the general conditions are still in place for an upside continuation as we are trending to the upside still. Some things that are sticking out is that, from yesterday morning after we had the bit of the flush up, we've actually been building some localized longs. This is representative of open interest. Long short ratio also coming up back to 50-50 was actually more short than long in that case. So there are some potential conditions for that. So we'll go through it. As this is increasing, obviously, it just means that there's a potential for a counter trade against retail because retail is wrong the majority of the time. On the funding rate side of things, BitMEX looking attractive at a pretty big negative, but for the most part, it's still quite positive. It's not overly attractive for long continuation. Big open interest players such as Bybit and volume size, OKX, Bybit, that type of stuff. They're still quite positive. Binance still positive. So again, not a lot of funding rate incentivization to have a continuation move up currently. Looking over the liquidations just from the local stuff, yeah, running pretty flat and pretty painful. The one thing that we are looking at as a potential condition for a reversal is if we get a pop up into, 64K, some of this structure, and then we get a failure back to the downside. Same thing to the downside. I would expect if we have a liquidity grab to the downside, then regains level and structure, you're probably doing the local liquidity gain. Until that happens, this is literally your range, 64K to about 62.5. That's the local range that we saw yesterday, and it's pretty well respected today. A little bit higher time frame and looking at the weekend liquidity, we said that flush up was nice in the downside move yesterday. A bit of crabby and downside. We're actually back to potentially, actually we're gaining some localized structure back, which is good. Allowing liquidity to build to both sides. I would say at this point, whichever side goes first is likely the side that's going to be the reversal. So if we have a bigger move up, potentially even towards 65K or higher, we want to make sure we're closing back above, 64.6, that type of stuff, the highs that we were doing early on Monday morning. If we have a liquidity grab that then closes below this stuff, then those conditions start looking really attractive for a potential short. Now, looking over at trading light. So first off, trading light, let's look at the 4-hour first. So there's still the imbalances left from yesterday. There's an imbalance here at 61.5 that's really attractive. And then down here at like 60.7K. I think this is pretty decent if we get that move down. We still have the imbalance above us, again, where we would potentially see a short failure up here, move up to potentially grab this stuff. We can always wick higher. It's the close that I care about, especially on the 4-hour time frame. So if we do move higher than 64.3K and then close below it, that's probably a decent condition for a downside move to punish that liquidity that's still in place on the long side of things. Looking at the heat map in this area as well, pretty stacked on both sides, just in general. There's quite a bit more building above us and a nice block as of later yesterday evening. It's pretty sideways. There's no real direction yet. You're still in a range trapping on both sides as we move into, the end of Q3. Priorities technically still up. We've bullshit back tested stuff until we really start losing 62K and breaking that kind of local structure. We're still eyeing up as a continuation. The loss at 62 likely means we test 61.5, and losing 61.5 would basically be these guys removing their orders and likely a move much lower to retest stuff sub 60K. But for the time being, the priority is still up. You're still looking too long for continuation until we have failures. Looking at the open interest, massive increase in open interest, mostly still in place. We saw a pretty decent amount of long liquidations basically in this 1 4-hour candle, which was nice. But outside of that, no real major changes. If we go a little bit closer and look at the order flow as it's coming in on the delta, we had quite a bit of guys out of position here. Not a massive amount, but all these guys are being punished right now with this upside move. There's definitely enough short liquidity to take us back up to test the highs at 64.3, 64.5, and potentially even higher. If we do have a move higher, again, I can't say enough. If we get a move higher and then we get a 4-hour or 4-hour plus time frame close under 64.3, you're looking at a pretty nasty liquidity grab and then potentially some downside. Until that happens, you're still looking to eye higher as the long short ratio is still 50-50, which is generally positive for bullish and continuation. So general game plan, no real major changes from yesterday. The only thing is there is that potential short. I'm looking at it here on the 1 hour time frame just to kind of reiterate where that is. 64.5, you know, we can have a wick higher into the structure. The moment we start gaining August at 64.6, that potential short is invalidated entirely. I think you still have the likelihood of continuation. People are still happy to short. A lot of shorts were coming in over the weekend. We've only grabbed part of it. And as we saw in the liquidation heat map, there's still plenty above us if we're going to have that type of continuation. Any loss here that starts to lose, even the more local stuff, 62.7, 62.5, that's the first kind of break of structure. That should force us lower to 61.5 to test things. And if that's the case, likelihood we either get the initial step off. So if we do this first, we do the, let's say we do the down move first, right? We have it, let's say we reject the weekly open, break down, and then come to this low. The idea is that we actually flush it really hard, and then we do a higher low, which is basically this move. And then I want to see some step offs back up to grab that upside liquidity. The problem I have is that there's quite a bit of, you know, 50x and high leverage stuff that was allowed to rest from the weekend that has not been fully punished below us. And that's why I think whichever side breaks first is the likely move that has the reversal. So watch this weekly open. If we get the local weekly open gain, that should be a pretty easy move back up to test the highs. Watch for that potential failure. Don't assume you're going to get the easy short. It could just continue because that's still the, you know, the general trend is still to the upside. We've been making higher highs and higher lows continuously. It's if we have a move up that breaks above, closes below, and then, you know, closes below some, you know, 4 hour structure, then we're talking about that potential short to come back lower and to grab that long liquidity that's going unpunished. So it's really specific about which move happens first. Until that happens, your local range is from, yeah, I think it's 62.5 here. It's about 62.7 to about 63.5 if you think the weekly open to the July Q3. Lots of previous daily opens in here. Nothing really crazy to say about it. Play the range until proven otherwise because you're stuck in that currently. So there is even a lower time frame failure from the weekly open to come back down towards the July Q3. Again, I'm not waiting for it. We're still net long, looking for that continuation until we have some kind of provable breakdown. Structure failure for the upside trend doesn't really start to occur until we start losing sub 60K, like 59.5 and especially 58K. At any point of loss of 58K, we must retest the local actual lows, you know, 54, 53, heck, even 51 is possible. But yeah, that's what we want to see in general. The upside continuation is still the most likely currently because we are still trending up. Watch for those potential local plays. Until then, yeah, don't get sucked into like the local crabby price action. That's probably the last thing I want to end on is these little structures. They're designed to do two things: A, punish local high leverage guys, and B, allow larger, lower leverage positions to build outside of that, thus building the liquidity necessary for a continuation move or a reversal. The free longs are gone, right? Wait for either a breakdown, a confirmation of failure, or wait for continuation if you're not in a position. Until then, you're welcome to play the range low time frame. For me, I'm waiting for some more key breakdowns or continuations. That's it. Peace out.